The local inflation rate has remained unchanged at 5.2% in May, with housing and utilities being the largest contributors. Chief Economist at RMB, Isaah Mhlanga, joins us now to paint a clearer picture and outlook of the print. Thank you so much for your time, Isaah. Now, just to start us off with, what story are the contributors of that inflation print telling us? And also, quite interestingly, looking at transport and food being the bottom contributors there.
Thanks for having me. I think if we look at the headline number, obviously, it was steady at 5.2%. If you look at core inflation, which excludes the volatile food and energy prices, also steady at 4.6% on a year-on-year basis. So essentially the same numbers as what we saw in April. Where you saw some movements, of course, if you have to dig a little bit within the food and non-alcoholic beverages, we saw a slight improvement. If you look then at clothing and footwear, moderation to 2% on a year-on-year basis. The historical or the April number was 2.3%. That helped to moderate prices. But on the other hand, if you look at transport, there was an increase to 6.3% from 5.7%. So that sort of offset some of the improvements that we saw in clothing and footwear, which essentially meant that on aggregate, it was flat. But what we would expect going forward with the currency performance that we have seen on the back of the developments politically, that should help to moderate in imported inflation, which should help. But services inflation remain quite sticky. And that is a major driver of core inflation. That is really the underlying inflation measure in the economy.
Yeah, really quite a lot to unpack there, because obviously you're still saying that services inflation is still quite a worry. You're seeing transport, even though we know that obviously that is very, very volatile. But also quite interesting that you bring in the rand here. We have seen it below 18 rand against the US dollar at this point. Firstly, let's start off with the interest rate decision that we can expect from the Reserve Bank. How much of an influence do you think these factors, and particularly the rand, will have on that decision, but also the tone going forward?
So just looking at inflation, which is what they really target, on the basis of our expectations going forward, we think the SARB is likely to start cutting rates in November. But if we then look at the underlying factors that are driving some of the factors that the SARB cares about, currency is one of them. An improvement that we are seeing currently, if it is sustained over the next couple of months, which we think it will be, then it increases the risk that we might see that cut being brought forward to either September. Unlikely to be July, still too early, but September probability increases significantly. But then you also look in terms of oil prices, they have been quite stable, combined with a stronger currency that should help to moderate fuel prices, which is a major contributor into headline inflation. But we also have a different dynamic where the SARB would prefer to have a lower inflation target going forward. That is quite difficult to pinpoint as far as when they move to a lower inflation target. And that is going to influence whether they are going to reduce rates and how aggressive they're going to be. In that event, we will think they are likely to keep rates on hold, even though inflation will be moderating, on account that the target will be much lower than the current midpoint of 4.5%. But that's something that is not yet in their decision-making framework, given that the target they currently work with is 4.5% and not anything lower than that.
Yeah, it's quite interesting that you mention obviously the prospects of the lower inflation target that the SARB has been talking about for a while now. But that headline inflation is still at 5.2%. Yeah, still quite far from the midpoint of the current 4.5%. Can we then maybe expect the SARB to be a little bit hawkish, so not as to front load any expectations from the market at this point?
Look, given the market developments, there is no need for the SARB to be hawkish. The improvements from a fiscal perspective, borrowing costs will reduce. We saw bond yields, decline across the curve, combined with a stronger currency. That means the fiscal risks are likely to be slightly better, even though much of the adjustments needs to be on the expenditure side. So that remain a risk somewhat. But from the underlying, inflationary pressures, we continue to see a moderation if they change their inflation forecast on the basis of a stronger currency. Then they are likely to change the tone to, inflation is likely to come down much quicker than previously expected, and therefore the tone should be slightly dovish. We would not expect that, at least not soon. We think the SARB is likely to try and push inflation expectations closer to the midpoint of 4.5%, which we are still currently quite a bit far away from.
Yeah. Obviously, I know that the SARB watches the Fed very closely, but also another big central bank that has started cutting interest rates is the European Central Bank. Do you think that some of the SARB members could find an incentive to maybe be more dovish than we think?
Not necessarily. The big influencer is the Fed. Until the Fed changes its outlook and start signaling quite strongly that they will start cutting rates in the next few months, the SARB is unlikely to try and guess what the Fed is going to do.
Yeah.
So they're likely to wait until they have a proper signal from the Fed that they will start cutting rates, which will be reflected in the performance of the currency, in addition to what we are seeing now in response to the political developments. It's of no use to try and guess what your other policymakers are going to do. Rather wait and see clearly which direction they are going, see that filtered through into the variables that matter for you, and then you respond. It also doesn't help to try to be a front runner in cutting rates before you actually bring inflation to where you want it to be. So rather follow the pack. Already we have seen emerging markets cut interest rates, which brings some expectations that the SARB is likely to follow suit, but our inflation still remain relatively high.
Yeah, all right. Well, thank you so much for your time in unpacking that inflation print with us, and also some expectations from the SARB. That was Chief Economist at RMB, Isaah Mhlanga.